Technically speaking, I would say that a lot of people are interested in defense stocks. So maybe after some time, even Garden Reach will also attract some buying. But recently, I did a study of about 20 defense stocks, and I have found that most of the stocks have gone up in a parabolic manner. When stocks move up in a parabolic manner, at some point in time, there would be a major correction, and that correction could be pretty long lasting. So if one is not greedy, I would suggest you book profits. Otherwise, you hold on to Garden Rich and put a stop below 1450. And the other stock is Sunteck Realty. Sriti?
Yes, it's Sunteck Realty.
Well, regarding Sunteck Realty, the chart formation is again somewhat similar. In this case, I would say that no, you should not be exiting right now, but put a stop loss below 550 and continue to hold, because Sunteck might still give some more upside.
Okay. I'm coming back to you on this next one, and this is on Avantel. The shares were bought at levels of 113, I believe. Let's try and pull up the chart a little quicker so that I can look at the price. We're talking about Avantel. The stock is currently trading at 178. It was bought at 113 or thereabouts. Sushila from Bellary is asking about this, asking whether or not she should consider an exit. What level would you suggest an exit at, Rajat?
It is Avantel, right?
That's right.
Well, Avantel, I would suggest getting out right now. I would suggest that at 176, see, 5 trading sessions back, it was around 120. And now it is 176. You're getting a 50% in 4 days. So if I were in the investor's shoes, I would have definitely booked profit here.
Coming back to you, Rajat, the next counter is Avanti Feeds. This one's from Ujjwal. They say they bought the shares at a price of 562 rupees. It's currently trading above 600 rupees. Would you suggest booking profits or keep holding on to it? It's given about 40% in returns in the last 6 months.
See, regarding this, I would say qualified sell call. If it were to fall below 575, then it becomes really weak. Then one should seek an exit. Otherwise, if it fails to take out 675 in the short run, then also one can get out of it, but not at current levels of 625.
Okay. I'm coming to you, Sunny, on the fundamentals of Union Bank of India. We've got Shivanand, who's asking about this. He's bought 5,700 shares at levels of 95. If we can pull up Union Bank of India very quickly and look at where the charts are right now. In fact, it is at 145. He's bought this 1.5 years back, Sunny. Should he hold on based on the fundamentals?
Yeah, I think, first of all, congratulations to Shivanand for a very excellent gain during the last 2 years. What I feel is that PSU Bank still has some steam left in terms of valuation catch-up, and one can continue to hold. In fact, one can adopt a strategy of partial profit booking also. So out of whatever number of shares Shivanand is holding, 50% can be offloaded and shifted to a private bank like Axis Bank or IndusInd Bank, where the relative upside looks much better as compared to the PSU Bank. And within PSU Bank, Union Bank can also deliver a healthy return, provided the June quarter numbers are robust. So we need to wait and watch for the June quarter number. Anyway, the growth guidance which we are seeing from the entire PSU Bank category is 10 to 12% in terms of trade growth for FY25, which is slightly at a lower end as compared to the private peers at 14 to 15%. So partial profit booking is advisable in Union Bank, and that can be shifted to a private bank like Axis or IndusInd.